This is the only smart money concept strategy that you are ever going to need to become a profitable trader. In this video, I will tell you how to use smart money concepts to make consistent profits from trading. So make sure that you watch this video until the end so you do not miss any important step that you need to know about my smart money concept strategy. Let's get into this video. So we are always going to start our analysis from the 4-hour time frame. And on 4-hour time frame, we need to do two things. The first thing is that we need to identify the overall market structure, and we can do that by identify the break of resistance, break of support area, and if the market is creating higher highs and higher lows or lower lows and lower highs. The second thing will be that we need to find the imbalance in the market. Now I'm going to explain what is an imbalance and how we can identify the market direction. As I said, the first step is to find the market direction, and we can clearly see that we have broken this big resistance on a 4-hour time frame. Buyers made a movement to the upside right here. We have created a higher high. When we created a higher high, we made a pullback, which is called a correction movement after this big impulsive movement. And from this level right here, buyers started to go up again. We have again broken the previous resistance, which acted as a higher high as well. And when we broke it, it seems that the market retested this level and went up. Now, when we were going up, there is a big imbalance, which is going to be our second step. Now, how do we know that it is an imbalance in the market? So to understand that, I am going to explain it in a very simple fashion. The market moves on a human psychology. Now, when the market is going up and there is a pullback and we broke the previous resistance that we have created, everyone knows that we are in the buy. Alright? So when everyone knows, the retail traders, they're just going to wait for the market to retest that level, and they're gonna buy again. Now when they will retest the level and market starts to go up again and we broke this resistance again, everyone is gonna be buying right here as well based on some sort of breakout trading strategy. So when there is a big buy positions happening and every retail trader is looking to buy this, what's gonna happen? If buyers do not work out and sellers make a big movement, that will be considered a liquidity hunt, which is an imbalance in the market, because that is the price level which has turned a lot of people into the wrong side of the market direction, creating an imbalance, and then the sellers made a big movement to the downside. Now same thing has happened in our example as well. You can see that when we broke this previous resistance and market retested that resistance, buyers made a movement to the upside, and look what happened. There was a big liquidity hunt, thus market has created an imbalance, and then the sellers made strong movement to the downside. We even broke the previous higher low that we have created right here. So there is a big imbalance and the sellers have made a strong movement to the downside, creating a new lower low. That is the first part of the Falcon Trader smart money concept strategy. Find the overall market direction on 4-hour time frame, then find the imbalance in the market. And after following the two steps, just highlight the area where there was a big liquidity hunt. And once we do these steps, then we will go down to 15-minute time frame to wait for the market to make a pullback towards that liquidity zone area. So let's mark the area from where there was a big movement to the downside. Market liquidated a lot of position right here, and this is going to be working as the area from where we can expect a market to make a pullback. And if we see some sort of rejections here, then we can look for an entry on the smaller time frames like 3-minute or 1-minute. So as we have completed all the steps on 4-hour, it's time to go down to 15-minute time frame to wait for the market to make a pullback. Now we are on the 15-minute time frame, and this is the area of the liquidity zone. We won't do anything until the market makes a movement towards this area from where the big liquidity hunt happened. We just need to wait for the market to make a movement to the upside. Now the very important thing is that when the market will be making a movement towards this area, there should be a proper correction movement, like the buyer should be coming up, creating a higher high, higher low, then higher high, higher low, new highs, and this is how the market needs to come up towards this area. There has to be a lot of struggling movement to the upside as compared to this big sellers movement. We can clearly see that how the sellers made a movement, but when we will be expecting a movement from the buyers, they should be coming up making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, so on and so forth, until we reach the area of the liquidity zone, and then we can go down to smaller time frames to look for the trade opportunities. Now let's see how the market is gonna come to this level and what kind of a rejection we can have. Now look how the buyers are coming to the upside. There is a lot of struggle from the buyers when they are making the movement. We have this higher high, higher low, a new higher high, higher low. Market has created another higher high and we came to that liquidity zone area, but we're not gonna just take the trade randomly when the market will reach this area. We want the buyers to first give us the sign of a rejection right at the top of the liquidity area, which created the big sellers movement to the downside. And we can clearly compare the right hand side to the left hand side, and we can see that how the sellers have made the movement right here and how the buyers have made the movement right here. There is a big difference between the buyers movement and the sellers movement. So now let's wait to see until the market reaches the top of the area from where the sellers decided to make a strong movement to the downside. Now here we can see that this is the area. I have put a line here as well, and now look how the buyers just got a rejection right at here. Now when we have got a rejection right at here, what we can do, we can simply just go down to 3-minute time frame. Now obviously we're not gonna take the trade right now because we have just got our first rejection, which is right here. So we can just wait for the market to give us double confirmation, which can be a double top right at the area of the liquidity zone. And if we get that sort of a rejection, we can place the trade from here. Now here you can see that we have again got a rejection right at here. So anywhere we place the trade right after the second rejection, put our stop loss just above the area from where the second rejection has happened, and our target at the lows of 4-hour time frame, it's going to be a good risk to reward ratio trade. And let's see how this will work out. Now why I said that we need at least 2 rejections, you can see that market even made a third rejection, which is exactly at that area from where we have put a line. When I said a second rejection, because after the second rejection, buyers are never gonna make a third attempt to go higher than the area of the second rejection. So that is why we have also placed our stop loss higher than the second rejection. And the market has clearly made a rejection again, but the market did not attempt to go higher than the second rejection and sellers started to drop. So we're just gonna see whether they're gonna drop towards our lower low, which is our targeted area. And we are already expecting a 10 rewards from this trade. So meaning if you are risking $100 on this trade, the potential upside is $1,000. If you are risking $1,000 on this trade, then the potential upside is $10,000. And here the sellers just hit our take profit, and we can also see from the 4-hour time frame that we have exactly reached the area of the lower low right here. Now on 4-hour, the difference is also visible. Compare this buyer's movement to the seller's movement. Sellers seem to have a lot of strength as compared to the buyers, and we got a rejection right at the area from where the liquidity hunt happened, and the sellers made a strong movement to the downside, creating an imbalance in the market. So that's how I use smart money concepts. First I do my analysis on 4-hour time frame. I find the overall market direction, then I find where is the imbalance in the market. I just identify that zone, then I just go down to 15-minute time frame to wait for the market to make a proper pullback towards that area from where the liquidity hunt happened and market created an imbalance. And then for me to take the entry, I go down to 3-minute time frame, 5-minute time frame, or even 1-minute time frame. But in this example, we went down to 3-minute time frame, and I wait for at least 2 rejections, and I take the entry right after I see a second rejection. Just place my stop loss above the second rejection and my target at the low of 4-hour in case of seller's example and high of 4-hour in case of buyer's example. So let me know if you guys have any question. I will answer to your question as soon as I can. And if you guys have got any value out of this video, do not forget to hit the subscribe button and turn on the notification bell. Thank you for watching. I will see you in the next video. Bye for now. Peace out.